What's going on, guys? Welcome back to another video. In this video, we'll be talking about market structure. So what is market structure? Is the overall direction of the market. We have three types of market structure. We have the bullish market structure, the bearish market structure, and the consolidation market structure. The bullish market structure, price creates size of higher lows and higher highs formation, while in the bearish market structure, price creates size of lower highs and lower lows formation. And in a consolidation structure, price creates size of equal highs and equal lows formation. In the bullish market structure, we look at for buy opportunities, and in the bearish market structure, we look at for sell opportunities. And in a consolidation structure, we either buy or sell. With market structure, we can easily know whether to buy or sell. So it's required to have good understanding of market structure in order to increase your prediction chances and win probability. Because the first step to making money is predicting the market, right? So on multi-step 2 index, we've got a bullish structure on 15 minutes time frame where price has been creating series of higher lows and higher highs formation. To identify a bullish structure, we should first spot the highs and lows. Then the next highs and lows that we are to spot should be higher than the previous highs and lows. For an example, we got this index from a high and a low. We got the high here, a high formation here, and a low. Next, price formed another high, which is a high formation, and another low at this point, a higher low. So why is this highs and lows called? Why is this recent high and recent low called higher lows and higher highs formation? When we check the price value of the first high that formed, which is this high, this is the first high here. The price value is 8,964, and the value of the low, the first low, is at 8,945. Then price proceeded to forming a new high formation, which is a higher high. So why this high is called a higher high is called, when we check the value of this high, its value is at 8,978, which is higher than the previous high, the value of the previous high, which is 8,964. So that's why this high is called a higher high formation. And the low that was formed, which is at this point, its value is 8,962, while the value of the first low is at 8,945, 8,962, which is the recent high, the recent low, sorry, which is the higher low formation, is higher than 8,945. So that's why this low and high, this recent low and recent high, are called higher highs and higher lows formation. Their values are always higher than the value of the previous highs and previous lows. So price proceeded to forming a new high formation, which is a higher high, and a new low at this point, a higher low. If we still check the values, we see that the value of this high is higher than the value of this previous high. So that's why this high is called a high high, same as the lows here. So after identifying the structure of the market, that's knowing if the market is bullish or bearish, would have a point of interest looking out for either buy or sell opportunities. So to confirm the market structure, we should at least spot two highs and two lows that are higher than each other. As we spotted this high and this low, we have to wait for price to form a new high, which should be higher high formation, and a new low, a low formation. So after these formations, we confirm the market to be bullish. Yeah, then we look at for buy opportunities. When we look close, we see that this high, this is actually a higher high formation, because the value of this high should be higher than this high. So price forming a higher high and a higher low, and we've confirmed the market to be bullish. We have to look at for opportunities. So price pushed up to form a new higher high formation, then a retracement, which is price coming to this level, because after we've spotted the market structure, we have to identify the historical levels formed in that structure, and this is a historical level, a level we've got past history zone. Same price, sell resistance, resistance, resistance. There was a break and retest support here. Then price proceeded to forming a higher high formation after the retest of this historical level of resistance. I got broken and retested at this point, turned support for a higher low formation. Price pushed up to form a higher high. So on this higher high formation, we should expect price to sell back to this historical level for a buy opportunity, because in a bullish market structure, our interest is on the buy side of the market. We are looking out for only buy opportunities. So price coming back to this historical level, which we should actually get a higher low formation, but it came to form an equal low, which is not bad as well, because equal lows forms, equal highs forms in a bullish market structure or in a bearish market structure. So price coming back to this historical level, coming to form an equal low, we can still look at for buy opportunities, being that the previous high, which is this high, was a higher high formation. It's actually higher than this previous high. So looking at for buy opportunities here is very valid, which this is a historical level and you can see how price bought gave the good buys to the upside. So this is a good buy zone in this bullish market structure after confirming the market to be bullish. So next, price came to form a higher high formation, and we should expect price to correct retracement for a new low formation, which is a higher low. Price pushing up again, higher high, coming back to correct higher low, higher high as well, and so on. So price moves in this form in a bullish structure. So after this high formation, this last high, we should expect price to correct back to a level for a buy opportunity, and we have this to be a historical level. After this other level here, after this first level, the next historical level we got is this level. Regarding to the histories we've got here, this is a fake out sell. Price reacted to this area. There was a break and retest. Price sold here resistance. So you can see there was a break above this level. Price came back to this zone. So you have buy possibilities at this point. So marking out this level and having expectations of a new higher low formation, we should be looking out for buy opportunities on this level in regards to history. So we can tell price bought on this zone, gave the buys, and a new historical level was formed, has been formed at this point. Would say we can see past histories, price selling here resistance, resistance, this rejections, resistance here, price sold, and we got the break above this level, which price came to form a higher high formation. So we should expect a correction, a retracement back to this level for a new higher low formation for a buy opportunity. So this is how we look at for trade opportunities in a bullish market structure. Identify the structure firstly, confirm the market to be a bullish market by spotting a high that is higher than the previous high and a low that is higher than the previous low. Next, we spot historical levels of same price, buy and sell on. Then wait for a retest of those levels for higher lows formation, new higher lows formation for a good buy opportunity. Like we've got here, got the buys, price came back to retest this historical level for a new higher low formation. We got the buys, the same thing as this point, still got the buys. Until price started creating equal highs, we got equal highs formation here, which is a bearish formation series of equal highs, having the first equal high, the first high, second, third, fourth, fifth. Then we start seeing lower highs formation, which is a bearish structure, and we got the sells. And price too came to retest this historical level. We got previous buys on. Consider price came here to bought from that level here. And ever since, the market has been in a bullish structure, we're getting series of higher lows and higher highs formation. Let's call this a high and another high at this point, a higher low, another high here, a higher high, sorry, my bad here, and the last high, which is a higher high. So this price creating series of higher highs and higher lows, having the first low at this point, second low, a higher low, yeah, third low from here, higher low, and we have buy possibilities at this point for a new higher low formation. This is the current market structure. So we could see price buy from this zone. Reasons is that we've got a historical level formed here, a historical level, and a higher low formation, a new higher low formation is expected on this bullish structure, which I was actually looking at for buy opportunities on this index on price getting to the zone here. So we could see the buys from this point based on history, same price, sell here resistance, getting the first sell resistance, second sell resistance, resistance there the third time, fourth resistance, fifth resistance, then a break above this level, resistance turn support. So we have buy possibilities at this point on getting some good confirmations. So this is how to spot the market structure, a bullish market structure, and look at for buy opportunities. Could see price buy to this zone. This is a historical area, getting price, sell resistance, got the buy support. There was a break of this level. So on getting price buy to the upside, we could see a rejection from this zone. So if I'm taking about opportunity at this point, my target would be on this historical level. Yeah, so that's it for a bullish market structure. Next, we've got a bearish market structure on jump 75 index on the 1 more time frame. The price has been creating series of lower highs and lower lows formation, having a high formation here. Remember, first and first, we spot the first highs and the first lows, which we've got here. Then look out for a new high and a new low formation which could be lower than the previous high. And you can see the new high and the new low that got formed here is actually lower than the previous high and the previous low. So we've confirmed this market structure to be a bearish structure. So next we spot historical levels formed in this bearish structure, which we've got one to be at this point, getting past histories, price, so resistance. There was a break and retest support. We got these buys, got these sells, price dropped to downside resistance, got these fake out buys, price still sold resistance. And remember, this was the last low, which is a lower low formation that was formed on confirming the bearish structure here. Price pushing up, we got a new high formation, which is a lower high formation, and is expected because we are looking to sell in on this historical level. Yeah, so spotting this structure and marking out this historical level, this would be my sell zone. I'll be looking for sell opportunities on price coming to this area, being that I expect a new low, a new high formation, which is a lower high, and price coming to retest this broken level of support, not on resistance, seeing the past sells as resistance, because if price can sell here resistance, we can still get the sells at this point as a resistance. So price proceeded to forming a new low formation, a lower low formation after the retest of this zone. After the sell from this point, price came to form a new low formation, a lower low, because this new low is lower than the previous low. So this is a lower low formation. So next thing we do is to mark out historical level, because we expect price to push up to form a new high formation, a lower high, and we can see marking out this level to be historical level. We got price buy support, and it got broken at this point out on resistance. After somewhat consolidation, we got price sell from this level as a resistance, forming a new high formation, a lower high. So at this point, I'm looking for sell opportunity until price sold to this level, forming a new low as well, a lower low formation before we got a break of structure. This last lower high got broken, price broke above it here, coming to form a new high formation, but we couldn't get the bullish structure continuation, which the market still continued on a bearish structure at this point, creating size of lower highs and lower lows, having a high, a low, lower high, lower low, and equal high at this point. And I think we're getting a break of this level. Initially, I was expecting price to sell from this zone, but we can see that we've got strong bullish momentum, so we may not get the sales from this point. And the supposed sell zone should be here. If price wanted to sell, basically, if the structure wanted to continue, you should be getting the sales from this point, regards to this history and the markets coming to form a lower high formation, because we got this to be a high, the next high, lower high here. So same price break past this level has invalidated this structure. We may not get the sales even from this point, because the supposed sell zone should be here. Yeah, so always pay attention to when the market structure shifts, when we've got previous highs broken. Let's see if we can identify previous bearish market structure. Good. We've got a bearish structure here where price formed the first highs. Remember, first spot the highs and the lows, the highs there and the lows here. The price pushed up to form a new high. We saw this buys to the upside, price coming to form a new high, a lower high formation. Then we got the sells to the downside, a new low has been formed, a lower low. So at this point, we've confirmed this structure to be a bearish structure. So you have to wait for price to push up to a historical level for a sell opportunity on price coming to form a new high formation, a lower high formation. And we have a historical level to be at this point, which you can tell price pushed up the first time, sold, so the second time. So let's call these the main sells, which I'll be looking to sell in at this point. When you're taking a sell trade here, confirming the structure to be a bearish structure, you are sure making good money from these sells. You can see how far price sold, coming to form a new low formation, a lower low, price pushing up as well, coming to retest this historical level for a lower high formation. You can see price sold the first time and so the second time. These highs are lower highs. Imagine taking a sell trade from this point. That's good money made on this sell move. That's it, guys. That's how to work with the market structure, identifying buy and sell opportunities easily in these structures. And you can do this on any time frame: the 1 hour time frame, the 4 hour time frame, the daily, the weekly, the 30 minutes time frame, the 15 minutes time frame. even the 5 minutes time frame and the 1 minute time frame, we can identify the structures, the market structures on these time frames. So for more educative contents like this, do what to smash the like button, drop a good comment on this video, subscribe if you're yet to subscribe, and to my returning viewers, I appreciate the support for engaging in my videos. It means a lot, guys. Let's do more and to have a wonderful day.